What's going on, y'all? We are back. My name is CJ.
My name is Shane.
And this is the Lending Bros podcast. Thanks for tuning in. Last time we kind of left everyone off on a cliffhanger. We were day of the FedCut.
FedCut day.
So drum roll, please. What happened with Mr. Powell?
Everyone said I was crazy, but they cut.
Oh yeah, everyone was doubting you.
Yeah, so they weren't going to cut. No, everyone knew they were going to cut. They did 50 basis points though. Powell didn't say anything stupid.
No, he did not.
He kept his mouth shut, which is great.
Yeah. And I think obviously we talked about this a little bit, right? But recap, interest rates, mortgage interest rates are controlled by the mortgage-backed security market, which is not necessarily controlled by the Federal Reserve rate, right? Which is what they cut. I thought it was interesting as far as what the mortgage market did really in the past week or so since that news. So what have you seen as far as interest rates and the MBS market that controls interest rates?
I mean, the market's been pretty flat.
Yeah.
So it's been kind of up and down a little bit. It actually lost. So rates technically went up a little bit after the announcement. Nothing, not even a full 1/8% or 0.125, but we did see a little bit of a decline. For the worst pricing for the worst in the MBS market. Yeah,
if you were to measure it, I would think it definitely went down. Right now, did it go down enough to actually affect interest rate? No, but it all in price and all those things that people don't need to know about was negatively impacted. Why do you think that was?
So. Yeah, I haven't done enough research to really speak super intelligently about it. From what I've been reading is Barry Beebe, you and I both follow. They're expecting there to be a little bit more reaction from the market as a result of the 50 basis point cut.
Yeah.
And they haven't really quite gotten enough reaction yet that I think that they were hoping for.
Yeah.
But I mean, a lot of this stuff takes time and it's also lagging data. So I think here in the next 30 to 60 days, we'll start to see the results of this. It's not like it's something that turns on a dime immediately. That's kind of what I've seen.
Yeah,
what about you?
I think it's probably, to your point, I think it's the market saying like, thanks, but what else you got for me, right? As far as rate cuts. And we do expect, I think the next meeting's, for whatever reason, November 8th is in my head. I know it's early November.
I have no idea. I'm going to trust you there.
Yeah, there's another Fed meeting. And so, I think odds are probably high that they'll cut again for that exact reason, right? The market didn't exactly react a ton. One interesting thing that I've seen, really, as mortgage rates have declined in the past, month and a half, right? We've seen a pretty substantial drop in rates, and I know a lot of people were expecting that to mean a substantial increase in, home buying and activity. We picked up a little bit, but I don't know about you. I haven't felt as much as maybe some people anticipated.
Yeah.
I still feel like buyers specifically, are a little on the fence.
Yeah.
As far as doing it, which I think is interesting. What do you first off? Have you seen that, and what do you attribute it to?
Yeah, I've seen that. I've seen more buyer activity as far as getting in the early pre-approval process, start to kind of spark things back up and start the conversation again. Definitely seen an uptick in contracts. Dude, not a good statistic, but we've lost more contracts than I think I have in my career because of like home inspections and home sale contingencies and stuff like that.
Yeah.
So we've seen kind of more people kind of go on the top of the funnel that are interested, raising their hand saying, hey, I want to learn more about a mortgage.
Yeah.
But yeah, definitely not the increase in closings that we were kind of expecting that to come out from.
Yeah, for sure. Yeah, that's interesting, right? I've obviously, you have the award for this month for sure.
Not a good award.
As far as, cancel contracts. I have seen that in the past probably 6 months. We've seen more cancel. In a weird way, I actually think that's just attributed to the fact that buyers feel like they have, not really feel, buyers have more, whatever the word is I'm looking for, more choice.
Negotiating power.
Right? Negotiating power, everything like that.
Fun story. I had a buyer that got under contract. She loved this house. Went through the inspection. There were a couple things that needed to be done, right? They asked the seller. The seller came back during negotiations. They're like, no, we're good. We're not going to do anything. So the buyer went back to the seller and said, cool, I'm going to go ahead and terminate. There's another house down the street. And they're like, no, just kidding. Like, we'll do everything. So it ended up being one of the realtors I work with ended up negotiating like $12,000 of repairs.
Wow.
Just because they showed their hand. I think sellers still kind of need to be reminded, you can come back and say no, but the buyer really has all the power in that contract. So they ended up getting a heck of a deal.
Nice.
And we locked them in. They chose to buy down the rate. It was 5.375.
Yeah.
And buying down the rate on a 30-year fixed.
Yeah.
So
I think it's interesting.
cool.
If you're a buyer and or an investor, right? I was talking to one of a buddy of mine who's a real estate investor and also a realtor. And he's starting to see some, it start to make sense, right? And he thinks in Q4, investors specifically, right, are going to be able to capture some deals before, because if we look at the data, right, people are probably waiting, one, for rates to officially drop below 6%, right? Yeah. But then two, they're probably waiting for after the election, because that's, pretty common in election years.
Yeah.
And, so there's going to be some homes on the market that sit, especially if they're not priced well, where sellers get a little, desperate's probably a little bit of a strong word, but and so he's gotten a couple homes under contract for like $30,000 to $50,000 below list.
That's incredible, man.
Yeah, which is interesting, right? Because I think it's a really short window that you have to do that, and obviously not every house is going to be able to have that be done. But it's a very short window. I think after the election, with another cut or two from the Fed, I think we're going to have that below 6. I think people are going to be entering the market more, and I think that window will probably dry up. But to your point with option periods, I think right now buyers have a lot of negotiating power for sure.
Yeah,
which is cool because it 3-4 years ago was very much the opposite.
Very much not the case. Yeah, for sure. Freddie Mac. Here's a Freddie Mac headline that came out. We'll just kind of read this and kind of see how we feel. So Freddie Mac said mortgage rates have been steadily decreasing and approaching 6% mark. This decline has sparked interest in both purchase and refinance markets. While mortgage rates do not directly follow the Fed's cuts, the recent drop has been largely anticipated by the market. The Federal Reserve's decision to cut rates by 50 basis points was already priced into the mortgage market, meaning we won't see a dramatic immediate drop. However, this move will likely push mortgage rates even lower over time, providing more opportunities for buyers and homeowners to look for refinance. I think that pretty well sums up.
Yeah,
dude.
Pretty much.
I want to do a shout out to Freddie Mac, dude, because I've actually helped a couple of people that work for Freddie Mac, and this has been a big push is to get accurate, good snippets of data out to consumers and mortgage. That's a really good summary for what's happening.
Yeah, and I think the main point there, right, that I think people need to understand is that the cut was much less so. Okay, rates are a lot lower, but it did, I think, signal a change in the Fed thinking, right, and signal lower rates on the horizon.
Yeah.
And then I know we've said it ad nauseum, right, but what that means, right, is right now the buyers are in control a little bit, depending on the house. Whenever rates drop, whenever demand goes up, whenever 7 to 10 million home buyers into the market, you're going to lose a lot of that control. So, if you can get the home for a lower price, renegotiate the rate afterwards.
Yeah.
I think that's where you can make some substantial, equity and substantial money for, yourself and your family.
For sure. You're getting blown up, bro. You're popular.
I'm a popular guy. I don't know what to tell you.
Also, if I have one more person reach out and ask them if their interest rate's 0.5% lower after just the Fed cut,
tell them
I might just end it all.
Hop on the gram. Yeah. So we talked a little bit about purchase, right, and seeing activity peak up, and maybe a little bit of contracts, right, but more so just interest, not necessarily a ton of people offering on homes, things like that.
Yeah.
Obviously, there are some, as rates continue to drop, there are some refinance opportunities that are coming back. When you've been talking to past clients or refinance clients, what's something you're seeing?
Yeah, so a lot of people, we're doing our best to educate people on, because it's a balance, right? Of because there's quite a few people that bought at the peak where their interest rates are 7.5%, 7.7, and I mean you're reducing your interest rate quite a bit if you're in the low sixes, right?
Yeah,
I mean
sure.
It makes sense. So I'm seeing some people fall victim of trying to time the market a little bit too much. So I think we do have to be careful we do want to advise our clients to take advantage of the lowest rate possible, but also if the savings make sense for you, like let's take advantage of it, right?
Yeah.
Some of the forecasts that I've seen is that it could be another 18 months before we see another 1% drop in rates. So if you do analysis on how much extra interest you're going to pay off that 7.5% rate to wait another 18 months for what may happen, like sometimes you got to kind of just take the win and move with it, right? So, what about you? What are you seeing on that?
Yeah, to your point, I think it just all kind of depends on what how the loan's structured, right? Like if I don't think it makes sense to add a ton to your loan amount, right? To have a ton of closing costs, things like that, right? But there's different ways, through the payment that you're the month or two that you're not going to be making your mortgage payment through your escrow account that you're going to get, right? There's different ways to structure it to where it can be beneficial to take, some of the savings that we have now, but not necessarily set you up for failure whenever rates hopefully find their bottom and, you're able to time it somewhat. So it's all kind of the structure, right? And each client's different. If, like you said, if you're really needing savings, then I think it makes a lot of sense. There's certain clients that don't really care. And so, we may look at, trying to time the market more. So it's just, it varies, right? I think just showing them the options and structuring it to a way where it's a win-win, even if rates continue to drop further, is the priority.
Yeah. Well, one thing I've seen a lot of people that are super motivated about, and I think they get it, is cash out refinances and either debt consolidation has been a huge opportunity. I'm talking to someone right now where they bought 2 years ago. Fortunately, they lost their dual income family, right? Husband lost his job and they got into a ton of debt. So, which really is hard to hear because this specific buyer had almost no debt at all. Owned like 2 credit cards, and now they maxed out all their cards. They pulled money from their 401k.
Yeah.
Now they're in a much better position. He got a better paying job. It was a blessing in disguise, but they just need relief, So for them, we haven't even gotten to the point. We typically run blended household rate. We didn't have to go there. I mean, it was just a no-brainer for him to do it. Another one I think that I know you've done a lot of these too is, unfortunately, or with OLT liens, right, with divorces.
Yeah.
So I've gotten 2 phone calls, just keeping in touch with buyers. Hate the phone call that, getting a divorce, having to, pull equity out of the house. There's a way to structure it because if you do a cash out refinance, there is a higher rate that you pay as a result of that.
For sure.
If we can structure it as an OLT lien, if you, let's say you have $400,000 house, you have $100,000 on your loan, and you need to pay your spouse the difference, so $150,000 of equity. Yeah, $150,000 of equity, then you can actually avoid doing a couple things. You can do a higher loan to value to go over the 80% cap, and then you could also have a better term on the loan because you're pricing it as just a rate term refinance over a cash out. So, if you're in an unfortunate situation where you have a divorce, you have a family member that's going through that could be a good opportunity too there.
For sure. Yeah, totally agree.
And we've talked about this quite a bit as far as real estate agents just educating their clients. And I think when I made the joke about if I have another person reach out to me about 0.5%, most of those people are realtors that have seen the content, that have seen the things. I think whether clients are their buyers or their sellers, whether they're considering refinancing, whatever the situation is, I think it's really important for them to explain how current and future market trends are going to affect their next transaction, their next step on that.
Question I'm getting a lot, I'm sure you are too, is, what is the outlook for 2025? Both with rates, but I think more importantly, right, with with competition and home prices and everything like that. What are you seeing from your research or even just your opinion? What do you think is going to happen in 2025?
In regards to real estate and mortgage?
Sure.
So I'm a big stats guy. I know that's really, really shocking. A lot of the statistics are not, they're pretty, they're not very aggressive as far as projections for real estate market and mortgage rates. They're pretty flat and uneventful, which I don't totally hate because I think that's actual usable data. So a lot of the forecasts on mortgage rates are somewhere in the mid 5s, 5.5-ish towards the end of the year. A lot of the projected appreciation, historical appreciation on a home is typically a little bit over 3% over the last, I think, 60 years.
Something like that. Yeah.
Projected appreciation for 2025 is right at like 2.2, I think, percent, which I think is really realistic, right? I think we'll see a little bit of a lull here in the next couple months from home sales and see some very, very motivated sellers making some cuts. And then I think we'll see the market start to pick up right after the election on there as well. So what about you? What are you seeing?
Yeah, I mean, I if you look at some of the data right on interest rates, I think somewhere in the 5s is probably realistic. I think into 2025, I think it's very realistic to get something in maybe the low 5s. I've seen those same projections. To me, it's interesting, right? I'm far from the expert on, forecasting home appreciation, but I do find it a little tough to gel as far as if we do see rates in the let's say low 5s, right, which is out there, right, as far as projections and things like that. I know there's a lot of data that there's going to be a lot of home buyers that enter the market in, with 6%, below 6% when rates get there. So that to me is pretty simple supply and demand, right? Like if more demand enters the market and same or similar supply is there, I would expect, if I were a gambling man, which I am not,
Sure.
I would take the over on home appreciation, being in the twos. It wouldn't shock me if we saw something in like the high single digits for 2025. Now, I think probably that projection is setting up 2026 to be that.
For sure.
Right. It wouldn't shock me if that comes a little earlier, though.
Yeah. Not a gambling man.
Not me.
Also, doesn't gel well. Is that like I don't know if I've ever heard that before.
Oh, really?
Yeah.
I don't know. It just kind of came to me.
Good for you.
Thanks, man.
It's great, man.
Thanks.
Well, sweet. Well, I think anything else you want
That's
to talk
it.
about?
Short and sweet today.
It's a wrap. All right, guys. Stay informed, stay cautious, and protect your financial future. Thanks, y'all.